This is Rick Rule for Rule Investment Media, sponsors of the Natural Resources Investment Symposium in Boca Raton, Florida, July 23rd through 28th. I'm delighted to welcome Rich Checkan from Asset Strategies International, a group that I've done business with long enough that I used to interview his uncle some 25 years ago at the New Orleans Investment Conference. Rich, thank you first of all for agreeing to do this interview, and thank you too for sponsoring and appearing at the Boca Raton Natural Resources Investment Symposium. Great to have you with us.
Rick, it's my honor and pleasure to be here. Thanks for having us, and we are looking forward to this event. I think it's going to be fantastic.
I think it's fair to say you spent your whole adult life in the precious metals business. So let's get right into it. What I'd like to talk to you about today is physical ownership and its forms, what can go right, what can go wrong. Let's start with what can go wrong. Let's say that you're attracted to the gold business. You think that the gold price is going higher, or at least you want the insurance offered to the portfolio with physical gold, or perhaps you're a speculator and you like the bounce that can happen in physical silver. What do investors need to know that can go wrong? If they get the big things right, what little things can sabotage their portfolio?
All right, well, I'll start off with the biggest thing that I think can go wrong, especially in an environment where I think gold and silver are going to start to see wind hitting the sails. We got a taste of it this spring with the Silicon Valley debacle and the folks rushing to safe haven assets. I think as that becomes more and more pronounced and this bull market catches wind in its sails, there are going to be predators. There's going to be sharks in the water looking for novices, looking to buy precious metals, and they're going to take advantage of them. We see it every bull market. It's kind of the easiest thing to do to protect yourself, in my opinion, is just ask one question before you buy an ounce of anything. If you're looking at someone and they're offering you precious metals, before you say yes to anything, ask them this: when I am ready to sell it back, will you buy it from me? You would be surprised, Rick, how many people say no to that. If my thought is this: if they don't want to buy it back, it means they don't value it. They shouldn't sell it to you in the first place. They should just give it to you. But we know it has value, and we know they do value it. They just don't want to buy it back because they don't want to expose the horrific margins they charged you on the way in. That's why most firms that don't buy back don't buy back. So if they answer no to that question, run away, look for another firm. And you might find them on the exhibit floor at Rick's Symposium, by the way.
Richard, at the time that your uncle and I entered the business, there was an even deeper flaw. There were dealers that took people's money that didn't exist. People consigned their gold to vaults that didn't, in fact, exist. So I would add that in addition to finding a dealer who's willing to buy back the inventory that you sell us, that you need to do business with a dealer that stood the test of time. You need to do business with a dealer that's been around for 20 or 25 years, because I think that you're going to see some fly-by-nights that aren't really in the business at all. But let's move on. One of the things that you and I have talked about for years is the incredible premiums that occur when physical inventory, particularly physical inventory in retail quantities, gets tight. The premiums aren't necessarily a problem for the kilo silver buyer, but they are a problem for the 30-gram buyer, the 100-gram buyer. So talk a little bit about premiums and talk about how you can safeguard yourself from paying too much.
Yeah, well, the first thing that happens is when people run into high premiums, they start assuming that the world is out of gold and silver or platinum or palladium, and nothing could be further from the truth. There's plenty of it out there, at least enough to satisfy investor demand, right? The problem is there's not enough of it in the form that investors buy. So they're not the small bars, the small coins. And the reason that becomes taxed or stressed is because the mints and the refiners that make those small bars and coins were geared up for a certain level of volume, and that's what their production was set to handle. And then all of a sudden there was a spike. It could have been COVID, it could have been Silicon Valley Bank, it could have been the silver, Wall Street silver trying to corner the silver market, whatever. All of a sudden everybody wants it and there's not enough, so the premiums shoot sky high, and sometimes they stay there. Like right now, silver's been at about a 50 some odd % premium for a long time. And everybody thinks, well, okay, so the spot price is low, the premium is high, there's no advantage to me buying right now. And I would say there's two things you can do to protect yourself against high premiums. First, call a trusted dealer. If you want physicals that's going to be delivered to your doorstep, put in your hands, they would know where the lowest premiums are. And it does change from time to time, right? So what rounds might be good right now, silver maples might be a lower premium tomorrow. Ask the dealer, they will tell you. The other thing, and we designed a program for Perth Mint in Western Australia 27 years ago when I first got to the firm, 96. And this program offers gold, silver, and platinum at just 2.25% above the spot price. And you buy it or you sell it back at 1.25% below. So it's only about a 3.5% round turn. And that premium has stood up for 27 years. It hasn't moved, it hasn't gone up, it hasn't gone down. It is a fixed premium. So anytime you hear that there's a silver squeeze or a gold squeeze for 1-ounce bars and coins, know you have an alternative, and this one comes with a government guarantee.
I think that's useful. What would you say to people, however, who want to have and hold their own precious metals?
Yeah, like I said, that's the first step, because when I look at precious metals and people come to me and say, I have nothing, where do I start? Between you and me, Perth Mint certificates are the cheapest, safest form out there. But it's my second step, because the first step is to put it close at hand so you have it if you have a financial crisis. The definition of wealth insurance is a store of purchasing power with high liquidity for a potential financial crisis you hope you never have. And that high liquidity means you got to put your hands on it right away if you need it. So I always suggest that people start with take and delivery, and that's where the dealer comes in. A good dealer will steer you to the product with the lowest premium at the time you're buying it. If it's for wealth insurance, it needs to be liquid, and you need to put more of your money in metal and less of it in the dealer's pocket.
And what about the intermediate step, which is to say you are nervous about storing physical gold and silver yourself because of the obvious risk to your personal security, but you don't want to own a certificated product? Describe a little bit about the segregated and non-segregated programs that investors might avail themselves of if they care about physical ownership.
Well, it's a good question, and keep in mind, storing it yourself is the cheapest way to do it until it's lost or stolen. And it's absolutely the most expensive, right? It's got 100% cost to it. So the bottom line is that's where you start. And my advice to folks is just keep a small amount on hand to bridge any short-term need till you can access assets elsewhere, and or no more than you feel comfortable storing and safeguarding yourself. Everything over and above that should be put in the hands of professionals. And those vaults can be domestic, they can be offshore. I will tell you that if you're going to put it in the hands of a third party, then you need to be comfortable with that third party. Either you need to know them well, or you need to have a recommendation from someone you know and trust well, okay, that they've done business with. And there's no way around it. If you don't want to hold it, somebody else must. And it's got to be somebody you're comfortable with. The options available to you are clearly you can take physical coins and bars that are specifically set aside, segregated for you, and put them on a shelf with your name on it, and then they're yours. Nobody else can touch them, etc. There's another option that's called unallocated storage, meaning, let's say, and the Perth Mint does this, where you have, 100 ounces of gold, and any particular day it can be in a different form, as long as there's 100 ounces unique to you, not pledged to anyone else in any other way under their control. So you can have 100 ounces one day, could be 100 kangaroos. Another day it could be part of a 400-ounce bar. If you don't care about that flexibility, they actually reward you with not charging you a storage fee at the Perth Mint. But most other places, I would only consider allocated, segregated storage, where they take your coins and put them on a shelf. Perth Mint, it's a little different. That's 100% backed at all times.
So let's talk a little bit, now that we've dealt with the broad topics, let's talk a little bit specifically about what Asset Strategies International does. You've dealt with retail investors for, I'm guessing, the better part of 3 decades. What's on your menu, and how do you segregate the products that you have relative to the needs of the consumers?
That's a good question. So yeah, we've been around 42 years now, 1982. I joined the firm 27 years ago, so I'm a newbie. I'm still learning the business. But I had great mentors from Michael and Glenn. We are full service tangible asset dealer. So we deal with and we buy and sell gold, silver, platinum, palladium, bars, and coins, whether it be shipped to you, stored at a depository on your behalf, and in the case of Perth Mint, you get a warehouse receipt or a certificate showing ownership. So that option is available for both personal and IRA funds in every case. We also buy and sell rare coins. They're primarily dealing with early US gold and silver, but we also work with world and ancient coins. But those last categories, the rare coin business, is a smaller part of our business because most customers come to us wanting bullion. They want that dollar hedge. They want that hedge for their portfolio. Only after they establish that does it make sense to look at a small allocation to something along the rare coin genre. So that's always another step later, but it's not the first, and it's never allowed in an IRA to put rare coins, by the way.
So, do you have a preference for, in terms of decent sized portfolios, for things like Engelhart bars relative to coins, or the other way around? Do you prefer the liquidity inherent, as an example, in U.S. government coins? What would be your preference in terms of somebody's physical holding, irrespective of whether they held them in somebody else's vault or in their own basement?
Now, another great question. I usually start with something that's very liquid, right? Because the definition is it's got to be recognizable. You got to be able to turn it into something else to meet a financial need quickly. And therefore, everybody else needs to know what it is. The two most popular coins, sovereign coins in the world, are the U.S. Eagle and the Canadian Maple Leaf. They're usually one or two. Usually Eagle's number one. And if you hold one of those two for that small amount of metal that you take delivery of for that initial financial emergency, I like that as an option. I also like when the premiums are lower than where they are now, I like junk silver for that purpose because it gives a little divisibility. That's pre-1965 U.S. silver coinage, quarters, dimes, and half dollars. So that's what I like for close at hand. Once I start putting it in the hands of the professionals, I think economy of scale gives you a better savings. And that's one thing we're always going to work with you on here at ASI, because my sales staff doesn't get paid a commission. That's different for this industry for the most part. I want them to listen to you, find out what's best for your meeting your goals and objectives, and help you achieve that. If they do a good job at taking care of you, then my job is to hold on to them because I want to have good people working for me, taking care of my valued customers. A lot of places, what you'll find is they work off commissions, right? So you come to them and say, listen, I want some wealth insurance, and they start selling you $20 Saints with a high premium. And you're never going to see that at our firm. We'll sell you $20 Saints when it's appropriate to meet your goals and objectives, but we're typically going to start off with the bullion coins. Once you get into economies of scale, I love kilo bars in gold. They're about $50,000-$60,000, but if you have significant worth, that's a great low premium way to own gold. I also love 100-ounce bars or 1,000-ounce bars in silver, but after you meet that initial liquid stash, so to speak.
Richard, thank you for many years of service to the gold and silver community. Thank you too for agreeing to do this interview, and thank you finally for your sponsorship and appearance at the Natural Resources Investment Symposium in Boca Raton. Be a pleasure to see you down there.
Same from our hearts. You're welcome, and Michael and I look forward to joining you down there. Thanks, Rick.